Hi everyone, no news today, so let's get straight into the data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So fear was definitely entering the market here today. We jumped all the way down to a 46. That's definitely the lowest read we've seen on this, going all the way back here to mid-November, and that was on the upswing. So seems like we're headed towards extreme fear. We're not quite there yet. That's down in the 20 range, but seems like we're headed in that direction. You can see momentum rolling down, strength rolling down, momentum rolling down, breadth rolling down, put call ratio entering fear, volatility, extreme fear, up around the 18 area. We talked about that being a potential yesterday. Safe haven demand, extreme fear, and junk bond demand still in extreme greed, really hanging in there. Moving into seasonality, you can see that was supposed to be the bottom of the month. We'll see if it is. We'll see if we get that rally into the Monday. Definitely interesting. But in theory, it's supposed to be all bullish here for the rest of the month. And then moving over to max pain, we finished all the way down at 510. Massive move lower. You can see that 510 put wall right at the bottom of the calls. So very bearish finish. Interesting. We'll see if that continues to play into next week. Bottom of the calls. First time we've seen that in a long time. Moving over to the SPY here, looking at the charts, you can see we round tripped this entire move and then ended up closing lower, 509.77, touched that level and bounced a little bit. Pretty good volume coming in on that last candle. Probably just closing up positions for the week end, and then you can see momentum and RSI definitely bearish, crossing below the 50 line pretty substantially. Need that 55 EMA to bounce there at 507.77. So if we get a bounce from that level, rally back up, get a lower high or a double top, and then we see structure breaking down, that's probably marking a clear top. So far, you just really have either one peak, maybe a left shoulder head, looking for that right shoulder, lower high setup so far. If it cuts right through here, however, there's absolutely quite a bit of downside. Could see this all the way down at 500 potentially next week. Then moving over to the tasty charts here on the 4-hour, you can see we hit that midline yesterday, rolled back down almost to that lowest ATR sitting at 507.70. So critical zone there, big volume on those selling candles, not what you would want to see. You can also see the ATR stops rolling down here, and right now those are at 520.94. Moving over to the NASDAQ actually hung in there quite well. We did round trip the move yesterday, but we held a little bit higher above this level here. And then you can see we're right at the critical level, 438. We did close above it on the daily candle, but we're a little bit below it after hours. You can see we threw a couple of wicks below it here a couple of times, but need that 55-day moving average to hold, which is 436.52. And again, same thesis, bearish momentum, bearish RSI, breaking back below the SMA. Moving over to the tasty charts, again, you can see we took out those ATRs yesterday, which was interesting, and they are still hanging in there. So the ATR stopped to the downside. 436.04, still bullish conditions technically. We're nowhere near that lower ATR the way that the SPY is. That's all the way down at 431.70, not anywhere near that. Still hanging in there right at that first ATR. Certainly possible we get at least somewhat of a rebound on Monday. Moving over to the Russell and the Dow, both of these down a lot on the day, 1.78 and 1.21. Russell touched that trend line here, need that to hold if it's going to bounce. If it cuts through this zone, I think I'm going to cut on this position, then wait to see what happens down around 189. Right now, momentum and RSI looking quite bearish, breaking down from this structure, and this could be one of those bigger downswings similar to what we saw here where you have a big peak, first breakdown, slight retrace, much bigger breakdown. If we see something like that, this could potentially move all the way down to the 170s, which would be very substantial, obviously. So something to keep in mind. Big down day at critical support on the Russell, and then Dow, same thesis. Big down move, touch that next level, 179.35, touch that level and bounce. Momentum and RSI very bearish. Almost oversold conditions already on the daily chart, which is pretty interesting. But it's been a pretty big leg down from the top to bottom. We're all the way down almost 5% on a closing basis. Moving over to the MAG7, the MAG7 did not break out. We were closely watching 367, gap down and fell, hit the 21 EMA at 357.08. Momentum bearish, accelerating, RSI breaking down. That does not look good either. So you got that big move up and then we broke right back down. So we'll see what happens. 349 still an area of support, and then you got the 55 at 340.35. Moving over to Apple and Tesla. Apple had another bullish day, 0.86. We hit that 55 EMA. That was the price target. Touched that level and then pulled back. We're still above 176.15. Next level 179.69. Momentum, RSI, volume stepping higher. Looks like some buyers are still coming in on Apple. Could send this in an upward trend over time. And then looking at Tesla, down 2%. Still in this consolidation range. Nothing crazy happening here. here. Support is 167.34 and resistance up at 177.70, so kind of in no man's land there. Moving over to staples and discretionary. Staples absolutely collapsing, over 1% down after breaking the level. Next level 72.50, so big sell-off, structurally broken. Everything looks weak. Similarly on discretionaries, 1.62. It looked really good yesterday, just retested VWAP, ended up breaking down even more. Below this level now, 174.76 is the next support, and then you got the 144 and 200 down around that 170.68 area as your next support below that. Moving over to breadth here just for a moment, you can see massive leg down, absolutely collapsing on both of these. 20-day breadth all the way down to that 16 area. This is certainly an area where you could see bounces. Seems like we're going to cut deeper though. With the ferocity of this move that we've seen, seems like this is going to have more movement, potentially down to that 7 or even the 4 area. If we get there, then you could potentially see some bounces. When we get there, that's usually at least a short-term bottom. And then looking at 50-day breadth, again, massive move down, hit the 40 level. That's not usually a pivot point. You can see over time there are some consolidations there, but usually it goes lower. Similarly here, consolidation went lower, so probably not going to stop here. Could go down to that 20 area. We'll see how it plays, but everything looks super bearish. You can see we hit overbought, oversold conditions on the 50, 20-day, not quite there yet. Moving over to 2-year and 10-year, both of these actually pulled back today, which is interesting. So we got equities going lower and yields going lower. It seems like more of a shift in sentiment, which is usually one of those ones that pulls markets down significantly lower. So keep that in mind. We hit overbought conditions. Makes sense for a slight pullback. Obviously, these are still in bullish trends. Moving over to the dollar, makes sense. Dollar went way higher. We're still expecting it to hit that trend line up around 106.4. Next level, 106.84. Momentum on RSI still very bullish. Overbought conditions here on the daily chart, but still seems like it should go at least a little bit higher. Moving over to volatility, bond volatility went higher a little bit, but VIX going all the way up to a high of 19.2. Very high. Hit that 18.5 level, hit the trend line that we talked about yesterday, so massive leg higher. That could be a short-term peak. Doesn't seem likely at this point. Probably going to push a little bit higher, 1 or 2 days higher, I would expect. You can see moves like this where you get here and then you do have craters. It's not impossible, but seems like it's set to go a little bit higher. We didn't hit overbought conditions yet, and I see more upside. Moving over to my accounts, you can see I was down quite a bit on the day, about $800. My numbers didn't go down too much because I did add some money from my most recent paycheck, so added some money there and then lost all of it and then a little bit more on the day. So that's always super fun, but otherwise not terrible. You can see I only lost $500. $560 on my main account, and you can see the NASDAQ was over $7 down, so if I had held those shares that would have been a $1,400 lost day, so not terrible, still did okay on the day. And you can see positioning. I put on some puts for the day, took off my shares, and then I rolled those out a day to 439 for the Monday session. Got a big credit on that, small profit there, and then I have some calls on for 2 days from now, so if I get assigned on that, I can do it. Otherwise, I can roll this out and continue to protect myself with some calls. Again, pretty decent credit there as well. And then looking at my poor man's covered call, rolled down to 439 for the Monday session for a $2 credit, so looking to protect myself there. You can see it's actually down even more after hours. So it doesn't look super great, but still playing deep protection. And then looking at the IWM, rolled down to 199 for today's session, and then rolled that out to the Monday session. So I was able to protect fairly well there as well. So between the poor man's covered call would have been minus $700 and then minus $350. So between those two would have been $1,050 loss. And then you can see I only ended up losing about $400. So I protected myself for more than half of the losses on the day. So not terrible trading, and we'll see if we can get an update on Monday. Let me know down in the comments section if you think this is a structural break and if we're going to be set to move lower, or if this is just a temporary and actually the bottom of the markets for the month, like the seasonality said. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.